Well, I was wrong. I said that markets could fall 24% if history repeated like Donald Trump's first trade war, but now the concern is that markets could fall much further than that. Strap in, because it looks like markets could be heading much lower. We're now getting flashbacks back to the pandemic and seeing levels of fear precisely similar to the pandemic. My name is Jessica Amir, market strategist here with Moomoo. It's great to have your company this 7th day of April. So $5.4 trillion in US was wiped off the US share market in just 2 days. The S&P 500 nosedived 6% on Friday. It's seen its biggest one-day drop since the COVID era. The Dow Jones fell 5.5% on Friday, the day before a similar sell-off. In fact, it's marked its biggest ever back-to-back falls of over 1,500 points. That's its biggest sell-off of 2 days in history. And if we think about the pin-up NASDAQ 100, which we've been speaking a lot about, it's now in a bear market. It's down 22% from its record all-time high. As we can see on the chart, it looks like it could perhaps be testing those April 2024 lows. Basically, this is far worse than markets fared in Trump's first trade wars back in 2018. We're seeing pandemic levels of selling right now, pandemic levels of fear, and they're set up for the Aussie share market. Also grim, the futures were earlier suggesting a fall of 4%. When markets opened. Commodities are down as well. Copper has fallen 6.2% in 1 day. Oil has tanked 3.3%. It's now at a new 4-year low, $59.93. While US bonds are rising, and that's pushing down bond yields. The US pin-up bond yield, the 10-year bond yield, is now under 4%. Basically, this setup is that markets believe that we're bracing for a recession. It seems maybe that the only course of action is that you basically focused on picking the bottom. So holding your breath, seeing how low markets will go before considering to buy. But I do think that that'll be some time away. Let's just bring up a chart of the volatility index. Now, this is telling me I don't believe we're near the bottom yet. So the volatility index, which you can track on Moomoo's platform, just type in VIX. We can see on the far right, the volatility index has surged to 45.6. That's a level that we have not seen since COVID. So the question is, will the Aussie share market fall 38% like it did in COVID? That is something to consider. So flashing up a chart here of the Aussie share market, we can see we're well down off our highs. We're down 10%. We're already in a correction. So now the question is, will history repeat? Given that the fear gauge is as high as it was in COVID, will the Aussie market crater 38%? Meaning we've got much more selling to go. Remember, in the COVID pandemic as well, when the volatility index was as high as it is now, the NASDAQ as well, the NASDAQ cratered 30%, while the Aussie share market was perhaps one of the hardest hit, falling 38%. So why are we seeing a much worse reaction than we did in Trump's first US tariff trade wars of 2018? Well, that's a good question. I'll answer it. My thinking is that basically tariffs have been slapped on every country and all at once. So we're seeing very quick retaliation tariffs now come in. We saw that with Canada last week, and then that was quickly followed by retaliatory tariffs from China. But basically, markets are struggling to gain optimism. We've got now Trump's advisors saying the US President Donald Trump is probably not going to roll back the tariffs, and he's holding pretty firm on those. So that's why now we're seeing the Federal Reserve Chair, Jerome Powell, saying damage from the trade war is far greater than expected this time, and it will lead to higher inflation and slower growth. So what do you watch today? Well, you brace for more selling and begin to think about getting potentially some capital ready for maybe buying the dip to maybe creating some potential life-changing investing opportunities for the long term. As for what we are watching today in terms of economic news, nothing really that could sway the market, but we are going to be watching ANZ job ads. This will probably show the Aussie economy is continuing to experience pain. We're likely to see job ads dive. Stay safe, happy trading, and we'll see you tomorrow. And stay close to the political agenda. We are tracking the federal election, which is under a month away. Stay tuned to Mumu's platform and we'll cover everything you need to know.